Well, thank you all for joining us today at this CEI online event. I'm Iain Murray, Vice President here at the Competitive Enterprise Institute. We're here today to talk about the future of money, about digital currencies, and specifically the risks of central bank digital currencies, or CBDCs. In response to the rising success of what we call stable coins, we've seen a wave of enthusiasm for adopting CBDCs both at home and abroad. On the panel today, we have CEI Adjunct Fellow Paul Jossey, an expert on cryptocurrency and financial freedom. His latest study, out last week, explores today's topic and is titled Central Bank Digital Currencies Threaten Global Stability and Financial Privacy. At around 15 minutes after the hour, we'll be joined by Congressman Tom Emmer of Minnesota, who is an outspoken advocate of the cryptocurrency revolution and co-chair of the Congressional Blockchain Caucus. Just last month, on the 12th, Representative Emmer introduced legislation prohibiting the Federal Reserve from issuing a CBDC. He will actually be joining us following this morning's congressional hearing about the President's Working Group's report on stablecoins and other digital assets. Before we kick off the discussion, I want to encourage everyone tuning in to participate in today's conversation. You can do so by emailing events@cei.org, that's events@cei.org, or submitting a question in the Q&A box, which you have at the bottom of your screen. Let's start off, Paul, with a very simple question. Not everyone in the audience will know what a digital currency is and how it works. Can you briefly explain it?
Thank you. Sure, Ian, and thanks to CEI for putting on this event. It's a very timely event, as you mentioned. And it is actually not a simple question. What is a digital currency? State legislatures in particular have struggled with this definition, as have members of Congress. So it is not easy to explain in 30 seconds what a digital currency is, but I'll give it a shot. So digital currencies are mediums of exchange and stores of value that are transacted exclusively online through digital ledgers that exist through computers running software called nodes that exist essentially all over the world, potentially, with any computer that is running the software. And so as the ledger is updated through digital currency transactions, all of the nodes all over the world potentially update the ledger essentially simultaneously, and the process starts again depending on how the code works. And so the benefit in this is certainly not speed or scalability. It's a rather clunky process, but the benefit is in security and in decentralization. So if one of these nodes that is running the ledger goes down, or several of them go down, the process continues, and there's no centralized point of authority where that can be shut down, for instance, with a hack or a virus or something like that. And so the trade-off is speed for security and decentralization.
See, and most people will have heard of Bitcoin, which you have as your background there, and that's the most famous example of a digital currency. But there are others, aren't there?
There are actually thousands of them, and they work through all different kinds of consensus mechanisms to update the ledger. And this is rather a point of controversy now. Bitcoin, as you said, uses a specific kind of consensus mechanism that uses energy to come to the updating of the new ledger. Others don't, but they sacrifice some of the decentralization. So this is one of the controversies here, and it's not a controversy with central bank digital currencies because there is only one node, and that is the central banking authority. And what central bank digital currencies are simply fiat currencies of that particular country that exist on the internet. And so there is no decentralization. There is no nodes all over the world running the ledger. There is one node, and that is monitoring and recording all of the transactions that are taking place with that CBDC.
So when people talk about a potential American CBDC, they often call it a digital dollar. Is that accurate?
Well, yeah, it is accurate in the sense that a CBDC, a digital dollar, would be a direct liability of the Federal Reserve instead of, for instance, a liability of a commercial bank. So that is a huge difference, and that has mass consequences that we will talk about in the risk part. So they are safe in the sense that they are direct liabilities of the central bank, but so it is accurate to call them digital dollars, but they are not. The difference is they are not what is called token based. They will not have the anonymity components that regular cash will. They will be monitored and recorded every transaction by the central banking authority.
So, as I mentioned earlier, there's a move towards central bank digital currencies around the world. What are the main arguments that they are deploying in favor of a CBDC?
Yeah, well, it's really interesting that the main proponents of CBDCs in the U.S. and in the international standard setting bodies were not very enthusiastic about these a few years ago, and they have now since for a couple of factors that we can get into, China introducing theirs, and Facebook with their now defunct project that was called Diem introducing theirs. This sort of accelerated the process for central banks, not only here, but around the world, to potentially introduce their own CBDCs. And the arguments are, although they are very flawed arguments in my opinion, usually range in 3 or 4 things. Financial inclusion is usually the first thing that you will hear from a proponent of CBDCs, that as we move away from cash as a society, that the poorest among us will still need access to central bank government money. There are 5.4% of Americans that do not have a bank account. And so this is one of the arguments. It will curb illegal activity is another. It will provide for more efficient monetary policy is another. And finally, cross-border transactions are the fourth one that you always hear these 4. But when you start getting down into the details and the design trade-offs and how this is going to happen, all of these benefits tend to dissipate or vanish.
So how exactly has the Federal Reserve approached the issue? How exactly has it studied it? What have we heard from them on the subject?
Absolutely, Ian. So it's very interesting that the main proponents of CBDCs at the Federal Reserve, I would say Governor Lael Brainerd is probably the biggest one. As I mentioned, if you go back and look at her speeches in 2018, she was not very enthused about this. Chair Jerome Powell has famously been on the fence about this for a couple of years now. But the Fed, as many in the audience will know, came out with a request for comment a couple of weeks ago, and to their credit, they were pretty neutral on the supposed benefits and the risks. And also to their credit, they said they were not going to do this without buy-in from all the quote stakeholders, and that would include the administration and Congress, and what they can glean from the public and other trade associations and what have you. So it's an interesting document in that the Fed should get some credit for its neutrality, but it's the first step in a multi-step process where they are sort of saying the right things now, but when we start getting into the actual details of the design process, a lot of these supposed benefits are going to go away.
What about international regulators? Those of us who've been studying the global financial system over the past decade or so since the global financial crisis are well aware of the importance of the role of the Bank for International Settlements in Geneva. Often what they say is adopted by central banks around the world. Have they been playing a role in this?
Yes, the Bank of International Settlements certainly has, and they are certainly, as you said, aware of their power and their their ability to suggest guidelines and policies to countries around the world. And they, again, if you go back to 2018, were sort of lukewarm about CBDCs, especially in countries with mature payment infrastructures and mature financial systems. They didn't really see a need for this. And then once again, you can graph, and I show in my paper the graph of sort of negative to positive speeches about CBDCs starting about 2018, 2019, or the end of 2018 and into 2019, when sort of these other outside events sort of overtook and changed their perspective on this. And now they are very pro implementing these for countries, even though again they are also aware of the risks, but they seem to they seem to think that this is a good idea and the risks are worth it.
Yeah, so you mentioned other countries, you mentioned specifically China. So who exactly is adopting a CBDC, and what reasons are they pronouncing for it?
Yeah, well, China is definitely the leader on this. They started their CBDC project back in 2014. It is now in sort of a second pilot phase. They have introduced this internationally with the they have agreements with other central banks in Asia, and they are introducing this in the Olympics. And so they are certainly the ones that are furthest ahead on this. There are other countries. Jamaica has a digital sand dollar. There's some countries in Eastern Europe. Many countries, in fact, a majority of them are experimenting with this in at least the research phase and the should we do this phase. China is, and I would say Jamaica and maybe a couple others are the furthest advanced in actually doing it. And as far as why they're doing it, there's a big contrast here between sort of authoritarian dictatorship countries who do not need to have the sensibilities of Western public relations, and they are very upfront and honest about why they are doing this. And this is basically going to be a tool for social control. Some of the language that comes out of the Chinese hierarchy are things like, we can use this to enforce party discipline. We can use this for economic control. And so I guess from their perspective, it's one of the benefits that they can further imprison their own populations. But why they're doing this on the other side is for Western countries, they're saying all the right things. Certainly the US is saying all the right things about the need for privacy and what have you. But there are still a lot of dangers and risks in that. And Iain, I see the congressman has joined us, so I'll let you introduce him.
Thank you, Paul. As you said, yes, we are indeed delighted to be joined by Representative Tom Emmer today. I'd also like to remind the audience that you can join in the conversation by emailing a question to events@cei.org or using the Q&A box at the bottom of your screen. Congressman, thank you so much for joining us today. I was wondering if you can explain your legislation on the Fed and the CBDC and what it plans to do.
Yeah, no, I'd love to. Simply put, Layden, my bill is a statutory prohibition on a potential surveillance tool that I believe would kill private sector innovation and deflate the dollar's dominance as the world reserve currency. In this case, this bill is about Congress regulating our regulators. And for those that are participating today that don't know, a couple of weeks ago, I guess we're getting a little bit more than that now. It was January 12th. We introduced a bill that prohibits the Federal Reserve from issuing a central bank digital currency directly to individuals. And why? I think there's a lot of reasons why. Let's start with, and then I'll turn it back to you. As other countries like China develop CBDCs that fundamentally omit the benefits and protections of cash, namely that they're open, they're permissionless, and they're private, right? It's more important than ever to ensure that the United States digital currency policy protects financial privacy, maintains the dollar's dominance, and cultivates innovation. Major concerns about the digital authoritarian model that China and others are putting forward. Cyber threats, right? Americans' financial data should not be centralized and housed by our government. Very easy to attack it. Just ask the IRS how well they've been able to protect against cyber threats and protect Americans' privacy. The privacy issue is huge. Our FDIC found that one of the primary reasons Americans are unbanked is because they don't trust institutions. This central bank digital currency model, and I'm going to keep calling it the authoritarian, digital authoritarianism business model, would exacerbate that concern and I believe ultimately limit access to a central bank digital currency. You've heard me mention 2 or 3 times already about protecting the dollar's place as the world's reserve currency. One contributing factor to the US dollar's primacy is its ease of access, both domestically and internationally. And ease of access that dollar-backed stablecoins, I would argue, are amplifying. But this authoritarian, this digital authoritarian style CBDC would neglect it. And then finally, and I'll stop here, it's about decentralization, right? That's the point of blockchain technology. Because data is decentralized, it's more secure. The Fed cannot and should never mobilize itself into a retail bank account that's able to collect personal identity information on all users and track our transactions indefinitely. And quite frankly, even if they say they're not doing that, a central bank digital currency designed along the lines of China's digital authoritarianism model would do just that. That's why we dropped the bill, and that's why I think it's really important that we as policymakers regulate the regulators and protect the innovators.
Well, the Competitive Enterprise Institute is all about rules, so we're very glad to see this from you, Congressman.
Iain, if I could just real quickly,
yes,
adding on to what the Congressman said, I saw on LinkedIn today, and I thought it was very apt. Someone said CBDC actually stands for Central Bank Digital Control, not currency. So I just thought I'd add that.
Actually, I'm going to adopt that. That's absolutely correct. I just listened to a witness in front of the Financial Services Committee in the House. It's so they can say whatever they want, but their actions are clearer than their words. That is exactly what they want. And by the way, guys, and everybody who's on this thing, beware of the defense industrial complex now telling us that we must have this to protect ourselves and as a matter of national security. That goes back to the last thing, Lane, that I said, which is the whole point of it is it's decentralized. You get security by decentralizing. You frankly submit your future to a central authority if you allow the central authority to collect all and to possess all.
I'd just like to talk for a minute too about another aspect of your bill, which is that and you've already alluded to it, is that it actually stops the Fed from offering retail accounts to individuals. Can you talk a bit more about the real and genuine risks of the Fed suddenly becoming a retail banker as well as a central banker?
Well, everybody on this call should recall back in August where our Treasury Secretary was lobbying Congress to have the authority in the legacy banking system, the current banking system, to require reporting on cumulative transactions of $600 or more. And when she was called on it, because all of a sudden, those of us out here saying, wait a second, I am here, the government works for me. Our current Treasury Secretary, I would argue many in this government, and frankly, some even on my side of the aisle, believe that you and I are here to work for government. This is not a Republican Democrat thing. This is people who believe in government versus people as opposed to people versus government. She wanted to monitor this, and when she was called on it, her answer was, there's a large tax gap and we're trying to chase down billionaires. You know, a lot of us were born at night, but we weren't born last night. Billionaires don't do transactions in their community bank of $600 cumulative. This is going after every mom and pop business, every farming family, every individual on Main Street across this country to, again, collect information and monitor behavior. And by the way, they'll tell you it's not. Because in that report that they put out a statement shortly after I think we put our bill out that said that they are not going to turn the Federal Reserve into a retail bank. Again, I'm going to tell you, they're going to say that to you, but we need to be vigilant because I know the people in the defense community are going to argue once again, as they always do, that it's about my safety. It's about your safety. It's about our national security. Everybody out there, remember, this argument is used constantly now, that it's your obligation to protect yourself and others, and that's why you're supposed to submit your liberties to your central government. Don't believe them. You can become a prisoner of your own security. The beauty of this technology is, again, the decentralization. And now that they've been called, at least for now, on their idea of moving towards a retail bank, they want to jam this digital currency policy into the framework of the legacy financial system. And by the way, guys, that doesn't work, because what is the difference between my debit card right now and what they're proposing? Plus, it'd kill innovation and work to further, I believe, drive these entrepreneurs off of United States soil, which is a mistake.
Exactly, Congressman. Can I ask you, what sort of interest has there been from other members in your bill so far?
It's the interest is growing, and I'm one of these guys that talks about personalities, much like you know, when I train hunting dogs. Different breeds of dog have different personalities. We human animals are really no different from that, right? And I look at people who have the same perspective I do, which I think is growing. A major concern for this overreaching central authority that we have seen during this pandemic could be not just destructive, it could end freedom as we know it if you turn this all over to a central authority. Remember, the Austrian economist Hayek wrote a book called The Road to Serfdom during World War II that I would recommend everybody go back and read. You know, it sounds great, this central authority, as long as we, the three of us that I can see right here, are making the decisions. But as soon as we aren't making the decisions on how to allocate resources and who gets to do what, guess what? Not a very good world to live in. And I think there's those that see it from my perspective. Really, government is a tool. It is a necessary tool that we must hold accountable and keep between the white lines. Then there are others. I would argue these are Republicans that date back to the Eisenhower era, where, you know, the debate between Goldwater and Eisenhower was it's in the Constitution and it's not in the Constitution. Well, the Eisenhower Republicans won out. They said, you know what? These programs that Democrats do, we're business people. We can just do them better. There are still those Republicans who believe that we can do this better, right? And they're having a more difficult time transitioning to a place where it's like, my goodness, this disruptive financial technology could completely change the way we do business to the point where we may not need intermediaries. That scares the bejesus out of them, because keep in mind, people who create things with their hands, with their mind, with their own talent and initiative are very valuable. There are those that do not have that ability, that simply try to be the middle person between the talent and the customer. What happens when they no longer are able to skim off the top as it goes through to the other side? And by the way, I would argue our government works in much the same fashion. And then the third group, and again, I'm being very narrow, because there's a whole spectrum of perspectives that are moving in a certain direction. But I'm going to just throw the other one into a couple of my colleagues on the other side that believe a digital world needs to look exactly like the physical world as we know it. My digital identity, you need to know exactly who I am, right? Because God forbid the government can't identify who I am instead of seeing the transaction that I'm doing, which should be anonymous. I should be able to do a transaction with another party in a virtual setting. And by the way, if it's open and transparent, those that are trying to make sure that there is not criminal activity afoot can actually supervise and then address their attention to that unlawful activity, as opposed to scouting my every move and documenting where I'm traveling to today and who I'm doing business with. And by the way, what are my good habits as defined by you? What are my bad habits as defined by you? And this is exactly why this country was founded in the first place. I'm allowed to have my own beliefs and I'm allowed to express them. And you can just get the hell out of my kitchen, right? If you don't like it. There. Other than that, I don't have an opinion.
Just one more question, Congressman, before I bring Paul back into the discussion. How would you describe Congress's attitude to cryptocurrency and blockchain technology? Is it afraid of the technology?
So I would say 6 months ago, you would have many in Congress who were not studying this, that frankly would conflate the two terms, blockchain and crypto. They would think, oh, it's the same thing. Well, no, it's completely different. I mean, one is a platform, the other is this wonderful space for innovating in the financial realm, among other places. But I think what you've seen since August, we got once they figured out, oh, there's money here. Look out, those of you on here, when government finds a source of revenue, it starts getting educated very fast. And that's pretty much what happened in August. You had the Treasury Secretary, as I understand it again, lobbying Senator Rob Portman's office for a tax provision on miners, but it ended up being this misguided, talk about a net when Jesus told the disciples to just throw it overboard. That's kind of what this is. They don't know what they're going to take in, but they're going to take in everything. It needs to be fixed. But because of that, I would say kudos to those involved in the space, because they came raining down on Washington like Washington had never heard. I heard as many as 30,000 calls in a day to a Senate office expressing issues with us. And because of that, I think myself and those in my office who have been working on this for the last 7 years, I think we would tell you that in the last 6 months, you've had an exponential growth in understanding. Are people all there? No, but that broad spectrum that I referred to earlier, when I said people are at a different place in the spectrum, but they're all moving in a certain direction, some have caught up very quickly. Really happy to see senators like Ted Cruz and others that are weighing into the space where previously we hadn't been seeing that, right? That just raises awareness. And I think you're going to see more and more of that. But it's taking its time. So again, kudos to you. And frankly, people in this space, it's up to you to really put pressure on elected representatives, the policymakers, who have to hold these regulators in check. If you don't do it, the regulators are going to continue to run amok, and God forbid they do what they're threatening to do, because I don't want to be China.
Indeed, as the answer to Juvenal's great question, who guards the guardians? It's us. Exactly. Yes. Paul, before the congressman joined us, you were talking about China, and the congressman alluded to various problems with China's CBDC, and in particular their social credit system. Can you talk a bit more about how the CBDC is absolutely essential to their social credit system? And Congressman, please join in the discussion as well.
Right. So if you are a dissident living in Hong Kong and you don't agree with the mainland government, this is not a good thing for you, for the Chinese government to be able to surveil and view all of your financial transactions. Not only that, but who's sending you money, who's supporting you, perhaps in another country. And what's even worse than that, China has gone to, we talked about the Bank for International Settlements. They have gone to the Bank for International Settlements in Geneva and tried to import this at their way of doing the CBD as the global way to do the CBD. So I think everyone here knows that the China social credit system, it can be very scary if you are someone that the Chinese government considers a subversive, and then you can't travel, or maybe you can only spend so much at the grocery store, or you can only use perform certain transactions. Well, take that to the next level, put that on steroids when they control all the money and can view all of your potential transactions. That's really scary. And as I said, they have no pretense about this. They have no need to give public relations out to the public, because they control their population in the way they do through their authoritarian government.
Yeah, and all I'd add to that, Paul, is that it's more than just monitoring. They're going to use this to control behavior. And it's not just behavior that would disagree with the government. Somebody out there is going to say, Tom Emmer, if you have a cigar every now and then, guess what? Since we are in charge of the central bank digital currency, and we believe that's an unhealthy activity, every time you purchase a cigar, we are going to charge you X, by the way. And we're going to raise the cost of you're going to pay more into the health system. Now, there's a lot of these, what do you call them, engineers, these citizen engineers. They're going to love that. Even here in this country, they're going to say, well, we've got to solve these problems. This is the fight that we're into, because we've done a very poor job of educating people that while you may be pointing the finger at somebody else and their behavior, you know what ultimately happens in a society that practices this type of oversight and control? It ultimately will come back to you. Everybody will ultimately be affected in a very negative way. I think the opportunity that we have here, guys, is enormous. If we can avoid using the Chinese digital authoritarian model, if we can create a model that truly is a decentralized, private, open model for all to participate in, you're going to see growth in this country like we haven't seen since the Industrial Revolution, like we haven't seen since the technological revolution started. It's going to be phenomenal. But the key is all the intermediaries here in government, and I know this is probably not going to be popular with some people, but the mob used to have people that it protected pay them the vig. This is literally a modern day approach that if our central government is able to do this, guess what? You and I and everybody else will have to pay the vig to participate. And if you don't, they'll know it.
Yeah, and I would just say one more thing, Ian, about that. Norbert Michel at the Cato Institute gave another nightmare scenario. The congressman mentioned cigars. What if you have your CBDCs in an intermediated bank account, and the Keynesians at the Federal Reserve say that the economy's tanking, we need more spending, so we're going to attach a negative interest rate to your CBDC holding. So if you don't start spending your money, it's going to slowly start disappearing. And this is sort of another nightmare scenario when you give the government this kind of control over your own personal assets.
Yeah, I agree.
Yeah, I'd just like to raise one thing that the congressman alluded to, which is the prospect of programmability. The idea that central banks won't just tax your transactions, but will actually forbid them. Even the Bank of England was considering whether or not to include programmability into any sort of digital pound. So, Paul, I know you have a section in the paper on programmability. Can you just explain a little bit more about that and its dangers?
Right. So if you sort of leave this all up to the political process, then things get very scary. So pick your product that is socially unfavored, be it cigarettes or guns or perhaps marijuana or anything else, or you will be sort of not only perhaps you'll be forbidden to purchase it with that, or perhaps an additional tax will be put on you. But the even scarier thing is the government will know about this sort of beforehand, before you do this. So so say you are a podcaster and the government says you are putting out misinformation. Well, let's just have some bureaucrat in Washington take a look at all your financial transactions and, oh, we don't like that one. And well, this person's been supporting you and we don't like that. So the implications for privacy, as the congressman said, are just really next level scary, and the programmability in itself is not a bad thing. If you know, the congressman talked about the potential of the creator economy, Web3, where people own their products to a level that they just don't right now. Now you can put programmability into smart contracts and get automatic payments for your work and things of that nature, but not when the government's the one on the other end controlling it and saying what you can buy, what you can purchase, how you can spend your money. And if you don't spend your money, in some cases, we're going to start taking it away from you.
Can I add one thing, Lane? When you're in China, they tell you that they're going to do this because they can. They're in charge. And you will just deal with it, or they will deal with you. In this country, guess what they tell you? Well, this is for your own good. Right. But the result is the same. If you truly believe in this constitutional republic and what we are supposed to stand for, no, my government does not collect the information unless I give them permission to collect it. And I'm going to take yours, Paul, one step farther. Let's say you got a peaceful protest here in Washington, D.C. What's to stop your government, those in charge, who may be the ones being protested, from using this digital authoritarianism to do all of the background and, frankly, impact the lives, the very livelihood and or lifestyle of those that might be objecting, right?
And as we've seen from the last 10 years, from people's tax returns getting leaked and unfavored political groups having their donor lists being leaked, you know, the government doesn't exactly have a good track record of keeping private, sensitive information private as it's supposed to.
Well, or in attacking. Does the name Lois Lerner ring any bells?
Right.
Lois Lerner was specifically directed to go after conservative-based what are they? C4s, the educational groups that file under a specific chapter of the IRS code. Look, it has happened. It has happened without digital currency. This, quite frankly, if they're allowed to do what China's doing, makes it easier for them to control their population.
Indeed, CEI did a lot of work on something which was basically a dry run for all of this, called Operation Choke Point, back in 2014, 2015, when the financial regulators were just trying to cut off the any access to finance for unfavored industries, completely legal industries like payday lenders, like firearms manufacturers, ammo sellers, webcam girls. They went after the lot of them. It'd be so much easier with this technology. We have one question from a colleague here at CEI. He's someone who's naive on digital currency, who only bought a first tiny fraction of Bitcoin and ETH. He says that libertarians like digital currency as a way of replacing central banks, he seems to infer. Is there a tension between that and the goal of maintaining the dollar as a reserve currency? Is there a conflict? He says that he thinks it's not clear, as he also sees people measuring their Bitcoin profits in dollars. So yeah. Where does the tension lie?
Well, that was mine. I'd love to hear where Paul's coming from, but where I come from, it's why I brought up stable coins earlier. I think what you're going to see if we do this right is a version of stable coin would be backed up by US dollars. That's only going to strengthen the dollar's position as the world's reserve currency. And again, if we don't get in the way, if we don't do what China's done, and it's easy access to the whatever the currency might be backed up by the US dollar, as long as it's easy access to people domestically and internationally, again, that is just going to, I believe, further solidify the dollar as the reserve currency, especially, Paul, when you see China literally trying to subvert this system with a digital authoritarianism model of a CBDC that I got to believe most of the world disagrees with.
Yeah, you're absolutely right, and thanks for the question, Ian. This is actually the subject of my next paper, is going to be sort of the how stablecoins will enable the dollar to maintain its status as the world's global reserve currency. You would not think that Tether, for instance, the largest stablecoin issuer, would be so popular in places like China, in places like Korea, or in Venezuela, where people are using stablecoins to maintain their purchasing power and skirt capital controls. So stablecoins are already popular all the way throughout the world, and we are winning, as Jeremy Allaire, the CEO and founder of Circle, another stablecoin issuer, stated in recent congressional testimony, we are winning the digital currency space race by not participating, by allowing the private innovation to take hold and allowing people to have access to dollars when they don't have, when they are in a less developed country and they don't have access to the U.S. financial system. They can have access to U.S. dollars through stablecoins, and so we will enter if this is done right, and we certainly look for your leadership on that, Congressman. But if this is done right, we will enter a new phase of dollarization throughout the world, but it will be a crypto dollarization.
Indeed, no need for currency boards if you, as an individual, you can you can use stablecoins. We have another question for the Congressman before he leaves. It's from Scarlett Bickerton. Do you have a timeline in mind for trying to get this legislation through? She knows that the Biden administration is expected to make a series of executive orders later this month on the issue.
Well, that's one of our concerns. Obviously, we dropped the bill when we did because we got to stake out a position here. People have to understand this is a risk, and I think it did that. I think it shook them a little bit from the standpoint that we have members that are going to push back. So hopefully that's going to impact. I mean, we got that presidential working group report that, quite frankly, was nonsense to me. All stable coins should be issued by central banks. Come on. And here's the deal. They think that people out on the street are too dumb to see what they're doing. What they're trying to do is, they tried to get rid of this 10 years ago. It was nothing, right? When after Bitcoin started in 2008, this is a gnat on the hind end of an elephant. It's not a big deal. Then it started growing. Okay, wait a second. Now we got to kill it. This is nonsense. Oh, my goodness. They couldn't kill it. So now guess what? Now we have to swallow it up. It's Jonah's whale that has to take this whole thing in and make it part of itself. And you know what? It's not going to work. I think people here in Washington, D.C., and quite frankly, in governments around the world better understand people are much smarter than you're giving them credit for. This horse has already left the barn, is now running out in the pasture. The question is, do you want it to run in the direction that makes sense for, the future opportunity and freedom that is what the United States and other free countries around the world represent? Or do you want this to turn into a giant surveillance tool where government's going to control potentially? It's one of these science fiction novels from years ago, everything, right? From womb to tomb. I hope that the message has been sent to answer the question. The message has been sent. You better not be radical. You better be willing to have discussions, because the other thing that's going to happen is next November, there's going to be a change here, I believe, in representation. And when that happens, I think then it's a full push ahead to start to do some very important things in this space, which will allow our legacy financial system to continue, but have the opportunity to evolve as Paul was talking about. We move ultimately from Web 2 to Web 3. Some companies choose to evolve and they grow and they thrive. Some choose not to evolve, and this is what this country is built on. We want the best. We want the future. And quite frankly, the future is now. And I hope the Biden administration, I think they're having a lot of, what's the word, bipolar, multipolar personality issues, where you've got the modern monetary theorists, you got the Keynesians, you've got the traditional, they're all arguing amongst themselves. And I'm going to hold out hope, Paul, that we do have a group in the administration, much like we did in the last administration with the Brian Brooks et al., Hester Peirce, Giancarlo. I'm hopeful that there are some of those embedded in the administration, that while we are not seeing them and hearing them outside the walls of the administration right now, that they're inside saying, whoa, you guys have to understand your legacy already is impacted based on some bad foreign policy decisions, based on inflation. You have an opportunity not to screw this one up. And I'm hoping that that's happening.
Well, thank you, Congressman. I know you have to go now. I'd just like to thank you for your leadership on this, and we hope to see you at another CEI event in the near future.
Well, I'd like to see you as Speaker of the House personally.
Hey, my friend Kevin McCarthy is going to have that job, but God bless you. All right.
Thanks, guys.
See you guys.
Oh, that was wonderful to have the Congressman here. We've got quite a few questions, Paul. So
yeah, Ian. But before we start, I did get an email, a correction that I want to go ahead and correct the record on. I said the sand dollar was the Jamaican government. It's actually not. It was the Bahamas. So I just want to go ahead and correct the record on that, and thank the gentleman that alerted me to that.
That's helpful. Thank you, Paul. One question that from Joe Capola, with regards to China, does that mean that any transactions that we as American individuals are making with Chinese people or companies are now being viewed and recorded by the Chinese government?
Everything that uses the CBDC, the Chinese, they call it the ECNY, will be monitored by the PBOC, the People's Bank of China. And so it does not matter if you are a Chinese resident or where you are in the world geographically. If you are using this form of money, this Chinese CBDC, you will be your transaction will be monitored, and there is absolutely no leeway on that, and they are very straightforward about it.
We have another question from Josh Distel, wondering, in a worst case scenario, is a US CBDC inevitable? And if that's the case, what would be the best case scenario for what a CBDC would look like?
Well, I do not think it's inevitable. I think that the chair of the Federal Reserve is not really jumping up and down doing jumping jacks about this. There's another Federal Reserve governor, Randall Quarles, who is very sort of anti this, and people that are at that institution that are looking at the facts are saying, look, do we really need this? Maybe it makes sense for other countries that do not have as mature a financial system and as mature a payment infrastructure system, but we simply just do not need this here. And the congressman alluded to why people don't have bank accounts. You always hear financial inclusion as the one. Well, when you start digging into the details, the Fed has already said these are going to be intermediated through banks. So with banks are going to come bank fees. With banks are going to come mistrust of institutions. People don't, if you look at Gallup polls, people don't. A lot of people don't trust the federal government. So a lot of the reasons that people, or they simply just don't have the minimum balance requirements. So a lot of these reasons that people do not have bank accounts are just simply not going to be solved by the CBDC. And when people look at this with a sober outlook, they sort of realize this. But there are other people that sort of, for political reasons, Senator Sherrod Brown certainly is one of them, the chair of the Senate Finance or Senate Banking Committee. is very much pushing this, but the Federal Reserve is not. They are taking their time, thankfully, with this, and I think if there's enough pushback, certainly from the political branches, as I said, they have already said they're not going to do this without major buy-in and perhaps without a law from Congress. So it's not inevitable. The best case scenario is that the privacy protections are actually put in place. And that human nature does not kick in, and all of the sort of the bad things from that standpoint don't happen. But the other risks that we haven't really talked about from the macroeconomic perspective, from the fractional reserve lending perspective, from the digital bank run perspective, I think all of those things are just inevitable. They are going to happen. They are going to exacerbate economic shocks in the American economy, and there's simply just no way to get around that. So the best case scenario is they protect our privacy, but I have severe doubts about that.
On the underbanking of America, one piece of research by our board member Todd Zawicki found that it was changes to the financial regulatory system after the financial crisis that actually drove 1 million people out of the banking system, and towards they much prefer things like financial services centers now. And I can't see a CBDC solving that central problem of trust for people who've been driven out of the system.
No, it's not going to solve that problem, and it's also going to harm the American economy, because as we talked about, these are direct liabilities to the central bank. So they will be intermediated through the commercial banking system, but they will not be able to be lent out. They will simply be assets under custody. So every dollar that gets converted to a digital dollar will be one less dollar that can't be lent out to entrepreneurs to start businesses. And so in the best of times, lending is going to be more expensive. There's going to be less available money for it. In the worst of times, when there's an economic shock, people will convert their other assets, be it regular dollars or just other government securities, commercial paper, whatever, into these CBDCs, and that's going to further exacerbate economic shocks to the system.
We have about 7 minutes left, so I just want to remind people that there's still time to put in a question to events@cei.org or through the Q&A at the bottom, if you would like. One question here from Mike Robertson, which is, with a CBDC or no CBDC, will tax compliance be the next Keynesian argument against crypto, and perhaps another rationale for government-issued stablecoins?
Well, we're already seeing that, right? The infrastructure bill, Janet Yellen, the Secretary of Treasury, is very much about monitoring this, and yes, they see this as a huge opportunity to sort of close this tax gap. And so, yeah, there is absolutely no doubt that they will continue along this road to crack down on people with, as was said, as little as $600, and they see crypto as just another avenue to supply the government's coffers.
Another question here from Christian Kamir. A very good point here, I think. The recognition that computer code is itself expressive under the First Amendment has been generally accepted since the 1990s. So choosing to use computer code like Bitcoin to express commercial interest should be under constitutional protection. Do you think that's the case? And if so, how is that going to go forward?
Well, certainly there's a potential argument there, and you never know when you get sort of these 9 justices together how they are going to interpret things that are sort of not natural First Amendment political speech things. But I would say under the Roberts Court, I have issues with John Roberts, but he has been very expansive on the First Amendment. So if any kind of avenue there to sort of limit the government's discretion in how they can control this is great. And, maybe CEI should write an amicus brief if that goes all the way to the Supreme Court.
We'll certainly think about it. I'd just like to pick up on one thing that we discussed with the congressman, and it's always good to finish on an optimistic note. You mentioned Web3. Can you talk a bit more about that, how it is based on cryptocurrency, and what would a private technology-led evolution of the web look like, and what are the benefits that could bring?
Right. So, the lady asked Ben Franklin, what do we have? And he says, well, you've got a republic if you can keep it. Well, we've got Web3 if we can keep it. And so this is the next potential iteration of the internet, if we can keep it. And if, the congressman said it's all for our own good if they sort of try to regulate this out of existence. But Web3 is extremely exciting. The creator economy. If you are a person that blogs or takes pictures or whatever, or does video content, instead of having a company take most of the revenue and all of your views. Imagine a scenario where you write a blog or you do you produce some video content, you put it on a decentralized app, a DApp, and once it gets so many views, a smart contract kicks in and you get automatically paid in cryptocurrency, and perhaps then it is automatically sent to the rest of the DApp's subscribers, which are can come and go at any time. There aren't the walled gardens that are keeping your data within them. And then maybe if it gets so many other views, then an instant consortium will follow will form with another DApp, and then your message gets spread across there, and then you split the money with the DApp that sent it. So there is no central authority. There is no one saying, this is misinformation. We don't want you on this platform. You lose all your followers. All of this is at the individual level. We talk about the technology stack. Right now, all of the power and the money is going to the top of the stack with these major apps. The technology stack is reversed. So all of the power is at the individual, but it doesn't have to be just creators. You can potentially have your computer power off of your laptop. You can rent it out overnight and get paid in a cryptocurrency the next morning. If you live in an urban area, you would be able to potentially rent out your parking space for a few hours. All of this can be automated, and individuals would be empowered to collect passive income in ways that just simply aren't even imagined now. I mean, we are just getting into this right now, but the potential for human flourishing is unlimited if we can get we can have the government stay out of it to the maximum extent that we can, and just let this creation happen, and get away from sort of some of the stifling behavior that's happening right now in the web.
In other words, it's a reversion to what Adam Smith called the system of natural liberty, where people bargain with each other for each other's services in a way that he could never have imagined. It
happens instantaneously, right? And across geographies, across language barriers, all of that sort of goes away, and people are all connected in ways that can enrich themselves and can enrich the global human population.
And as you suggested, it's an answer to the current questions around big tech that are consuming us today. Let's let innovation take its course, and the problem will solve itself.
Absolutely. So we simply don't want not only nobody's saying who can talk and who can't talk, or who can donate to a cause and who cannot donate to a cause, or the immense sort of cultural and government pressure that comes on people that have different points of view. All of that stuff, when you decentralize everything and you empower the individual, the ability for people to shut you up or to say that you should not be able to talk because they disagree with your opinions or your opinions are misinformation or what have you, simply cannot exist. And that's a world I think that I would certainly like to live in, and I think probably most of the people on this hearing this discussion would too.
Paul, thank you so much for all your insights today, and extend another thanks to the Congressman for joining us. I hope you've enjoyed this online event. We'll be sending out invitations to our next one, to all of you on the list, including an online book forum on April the 28th with author Alex Epstein on his forthcoming book, Fossil Future: Why Global Human Flourishing Requires More Oil, Coal, and Natural Gas, Not Less. And that'll be with my colleague, CEI Fellow, Richard Morrison. Thank you again for watching today. This has been the CEI online event. I'm Iain Murray, and we'll see you next time.